Hello students, so welcome to this third session of your May 20 November 20 attempt CFR and direct tax. Students, in this particular session now we will continue what we have taken to the last particular lecture. The discussion primarily is on the total income, was what we have discussed in the last class. The revenue receipt plus the qualified receipt is the income. That amount should also fall within the scope of section 5 so that we get the qualifying amount, and the qualifying amount should be computed in the manner laid down under the Act. So these are the prerequisites of the total income. Now students, that particular computation involves the classification of that qualified income into various heads of income. We have seen that each of the heads of income has a distinct mode of computing the income, and therefore the correct classification is necessary. Now what is the test of the classification? What is the test of the classification? So the test of the classification that we have seen was, number one, there is a specific charge of the amount and there is a general charge. So far as the specific charge is concerned, again there are two subcategories: unconditional, conditional. Unconditional, you will not even think about as to which is that, why or how. Those questions are not to be asked directly if it is an unconditional specific charge. I'll give you some example also, which was example was dividend. So therefore we said that it would be only be classified under the head, which head? PGBP, under the head IFOS, so on and so forth. The condition based also we have seen, and the condition based I have told you about the comparative mode, that if it cannot be classified under the head PGBP, only then it will be classified under the head the IFOS. Some example which was shared with all of you was interest, higher charges, and today also, like, we will now evolve upon more examples as we now touch upon to each and every heads of income. But I am telling you students, just keep this principle in mind. Directly we are not supposed to enter into the heads of income unless and until we are 200% sure that yes, this is the approach on the basis of which the amount is charged in that particular head. So what is the approach? So approach is the classification principle that I am just discussing with you all right now. After that students, once the specific charge is through, I told you that 95% of the amount will be classified based on the general charge, and the first section of every heads of income will lay down the test on the fulfillment of which a particular amount will be classified in that particular heads of income. A particular amount will be classified in that particular heads of income. So till the last lecture students, we have discussed about the interplay between the two heads, and they are house property and PGBP. The interplay between these two heads is what we have discussed. We have also referred quite important case laws also in that regard. And today now students, we will now enter into the next particular general charging section, which is of your capital gains. In fact, that list you have already taken 45.1. Last lecture I have already given you the written notes. 45.1, what is the condition for the chargeability under the head CG? What is the condition of chargeability under the head CG? The chargeability is that there has to be a transfer of a capital asset. Only if that there is a transfer of a capital asset, that the gain arising from such transfer will be charged under the head capital gains. So now then students, in this regard, the point that we will now discuss further in our particular aspect is about the capital gains part. Now there is one case law students, let me directly take you through to that particular case law. So students, all of you, again in that particular segment, please come to your note section. And in that, in your note segment, We'll take page. I'm repeating again, students, couple of things just because it's an initial lecture. Still, couple of things always need a reminder. Number one, the WhatsApp group would be prepared by those students who are watching the lectures in the centers. Other students who are there, for them we who are in the G drive mode, so for them we always will be creating the WhatsApp group. But the center students, please ensure to prepare the WhatsApp group. That is very important. Also ensure that my number is added also in that group, plus one more number which I have given you last time. So I hope that all of you have those particular contact details, because that is an important one. So my number, which is already being shared, and this is other WhatsApp number, one more number. This is my team number. So just keep them in the group so that the queries and all will be taken through that particular WhatsApp group, which we will all create. So you create for your center, for that particular batch. Please do create that particular WhatsApp group and do add these two numbers. I will be taking through those queries through this particular WhatsApp group, and that is how we are going to take it forward for each and every areas of the syllabus, plus any queries that you may have, that will be discussed in that group itself. Coming back, students, now in our discussion, the point that we were discussing was on the classification part. So herein, students, on the classification side, there is one case law that I want to discuss with all of you, which is in the case of the MP High Court judgment in Suresh Chand Goyal. This one, issue number 3, it is page number 40. Now, I have also told in the center to all of you that the textbook is now important, but nevertheless, if the textbook is not there, do ensure to ask from your center and coordinator the loose sheets which I have sent to all the centers pending the delivery of the textbook, because that is now maybe in courier, so they will have its own timelines, so they will deliver. So while the delivery is in the process, my humble request to all of you would be to ensure to check with your center coordinator for the notes of the respective particular topic. So they will arrange for the same, because now students, we will require those particular notes for the discussion going forward. So let's discuss this particular part. This was a case of the MP High Court decision in Suresh Chand Goyal. The facts of the case, we'll just read this question together. The SSC owned a huge plot of land. Finding himself unable to dispose of the land, he started selling small plots of land based on the buyer's requirement. Whether the income shall be accessible under the head capital gains or business and profession. So this is the issue under consideration. Please pay attention. Again, I am going to reproduce these facts before all of you. Students, in this case, the SSC has inherited his father's land. It was a huge land that he has inherited from his father. Now, obviously, he wanted to sell it off so as to get his money from that particular land. But huge land, just like a white elephant, it was very difficult for him to transfer the entire land at first place. He was not getting any buyers. The buyers, on the contrary, who were approaching to him was only for some piece of land. So therefore, knowing the difficulty, what he thereafter started doing was that he thereafter started making small plots in that huge land, small plot based on whatever was the requirement of the buyer. Accordingly, step by step, slowly and gradually, he ensured to dispose of the entire land in plots. The question therefore was, now here the SSC computed the capital gains, whatever the sale that he has made of the land in parts, that is through the small plotting that he did as per the buyer's requirement, he thereafter computed the capital gains. And we all know, if you are calculating a capital gains and if it is a long-term capital gains, then there is a concessional tax rate of 20%. So he paid in his total income tax liability computation, he paid 20% tax liability to the government. During the course of the assessment, the assessing officer, what he did was, he changed the classification from CG and took it to another head, and that head was, which head, students? PGBP. So the assessing officer took this particular income under the other head, which is PGBP. So the question that came up was this, as to which would be the appropriate head of classification, capital gains or business and profession. This was the issue under consideration. So students, what is your take on that? Or should I ask you this way, why the assessing officer would have classified this particular amount under the head PGBP? What could be the reason for that? And believe me, and just a clarification to all of you, that the assessee had no such particular aspect that he wanted to, he is in the business of real estate and all. That was not the case at all. He had his land inherited from his father. He was in some other economic engagement, nothing to do with the real estate, and he sold step by step the plots of land and finally disposed of the entire land that he has inherited from his father. So the question therefore is that, why is it that the department took this view that this particular income on the transfer of the land will be classified under the head, which head? PGBP. Why they have taken this particular view, students? This is the question which I need your answer. So what's your take on this one? Why is it that the assessing officer has made this particular classification under the head PGBP? What's your answer? Quickly. Why he has done this classification under the head PGBP? What is the reason? Anyone, can they tell me? What is the answer? Think about it. What is the answer? I can sense what would be the possible answer, that why they have done that, all those things. Students, the catch point was, you will not write here it, just I'm explaining you something and then we will write it together. Just pay attention. What the AO did. The assessing officer, students, went with the definition of the term business. Business under section 2 clause 13. Students, business has been defined under this section. It means what? It means trade, commerce and manufacture. And it includes what? Any adventure in the nature of, I'm just writing here TCM, any adventure in the nature of TCM. So what the assessing officer took the view was that, look, the definition of business includes what? Even adventure. So the fact that the definition of business includes the term adventure means what? Like, it is not necessary that somebody should be continuously doing those activity, only then it would be considered as a business activity. Adventure means even one single event that you may do in your life, even that can qualify as a business, because the definition of business includes the term adventure. This is what the assessing officer has put for the argument. So students, is this argument justified on the part of the AO? By the way, what is the motivation of the AO? Why the AO wanted him to be dragged under the head PGBP? What is that motivation for the AO? Why he wanted to change the head from CG and take him to the head PGBP? The motivation definitely we all know. First of all, in the head PGBP, if you have to do the computation, then there is no such concept of indexation. There is no such concept of indexation if you do the computation under the head PGBP. Whereas if the computation is done under the head capital gains, then we all know there is a concept of indexation that will be applied. Secondly, if it is under the head PGBP, then in that case, the chargeability, students, the rate of chargeability would be the normal tax rate and not the concessional tax rate under the income tax law, which is at 20%. So the normal tax rate is what would be applied if the income is classified under the head. Which head? Under the head PGBP. As against to that, if the income would have been classified under the head capital gains, then we have a special rate of tax, which is a lower rate of tax at 20%. This therefore was the motivation of the assessing officer to classify this particular income under which head? Under the head PGBP. So based on that, what's now, students, your take? Is the action of the AO justified? Say, final chance. Is the action of the AO justified? He is saying that, look, business includes the term adventure, and because it includes the term adventure, therefore what? It would be classified under the head PGBP. Is this argument justified? And the High Court has said the answer is no. Some students have picked up. I know what would be your reasons now. Why the High Court has said no? This action on the part of the AO is incorrect. What is the reason for that? So the reason for that is, students, the assessing officer to say that any adventure will qualify as business is incorrect interpretation. Why? Because even the adventure should be in the nature of trade, commerce and manufacture. Trade, commerce and manufacture. This brings us to the most important particular term to understand the business. This brings us to a very important term, that is trade and commerce. So students, what do you mean by the term trade and commerce? This is how you should get into understanding of finding your answers. This is the flow in which you should always approach your particular answer. So what is the trade? What do you mean by trade? What do you mean by trade? Buying and selling? Will that qualify as a trade? If we say buying and selling, will that be sufficient for it to be qualified as a trade? And the answer is no. Just because it's a buying and selling activity, that does not mean that it would be qualified as a trade. To qualify an amount as a trade, what is required is when you say trade, it means systematic activity carried out by the person. Systematic activity carried out by the person applying his skill, labor and intelligence. Applying his skill, labor and resources. So applying his skill, labor and resources with a view to earn the profit thereof. Again, I'm repeating, I'll give you those notes. Don't worry, just pay attention to listening those things. Trade implies a systematic activity carried on by the person by applying his skill, labor and resources with a view to earn the profit thereon. This is what is a trade. Systematic activity, students, therefore is a critical part of the term trade. Now you see what has happened in this particular case. What has happened in this case? In this case, we can easily see that there was no such systematic activity that the assessee has carried out. Why the assessee has not carried out any systematic activity? Because he was selling what? These small plots of land based on the buyer's requirement. And because he was selling the small plots of land based on the buyer's requirement, therefore what? Therefore the systematic activity is completely missing now in this case. And that is the reason why. What is systematic activity? See, let me differentiate this, or I will tell you when in this case the income would have been classified under the PGBP. When in this case the income would have been classified under the PGBP, do you know what the assessee should have done? The assessee should have said that this is a huge plot of land. Now let me sell this particular land in plots. How he will do that? He will prepare a layout, phase 1, phase 2, phase 3 construction, and in phase 1 he will have the residential projects plot as allocated only for the residential projects. That is the phase 1. phase 2, he may come up with the commercial particular projects, commercial property construction. That would be somewhere in phase 2. And then thereafter he will have the third phase of the construction or the plotting for the luxurious residential construction projects. Luxurious. So if he would have that plan, he would have had the design, and then thereafter he would have started selling that particular plot as per the design, as per the plan, then we could have said what? That the SSE is carrying a systematic activity. And because of that reason, it will then be classified under the head business and profession. But in this case, what you are finding, students, is that the SSE as such is not doing any systematic activity. Whatever the sale that he is doing, he is just doing those sales based on the buyer's requirement. And because he is selling those particular plots based on the buyer's requirement, therefore it will not be considered as, what? It will not be considered as a systematic activity, and hence will not qualify as business, and accordingly the income arising on such sale will be charged under which head? Income arising on such sale will be charged under which head? Under the head PGBP. No capital gains, isn't it? So therefore the income will be charged under the head capital gains. Lack of systematic activity does not lead these activity to be considered as a business activity, and because it is no longer a business activity, therefore the income on the sale of such plot will be charged under the head capital gains. Please take a note of it, students, quickly. Detailed notes, if there is any space crunch, I've already told you every chapter's primarily we have got this particular bifurcation, wherein thereafter you can just put your observation in the detailed note side. So students, please take a note of this one. First point. The term business has been defined under section 2 clause 13 to mean a trade, commerce, and manufacture, and it includes any adventure in the nature of I'm just writing TCM, but you write full form. In the nature of trade, commerce and manufacture. In the nature of trade, commerce and manufacture. Point number 2. Or not, don't write point number 2, just in the next paragraph. Therefore, merely an adventure will not qualify as business unless it is in the nature of trade, commerce, unless it is in the nature of trade, commerce and manufacture. Okay? Right, point number 2. Unless it is in the nature of trade, commerce and manufacture. Point number 2. Therefore, the term business implies a systematic activity carried out by a person by applying skill, labor and resources with a view to earn profit thereof. Students, I am splitting one sentence. Why I am splitting one sentence? Because this will help you to also develop your writing, because you have to write at the end of the day. How you will remember all that thing? So here it was about what? Systematic activity. Here it was all about applying the resources. And what is the view? With a view to earn the profit thereof. Fine. With a view to earn the profit thereof. Right, the third point. The third point. Therefore, the third point, in the present case, there is an absence of a systematic activity since there was no plan or design in place before the sale of land in plots. Before the sale of land in plots, the sale was completely dependent upon the requirement of the buyer Full stop. And now write the fourth one, the conclusion point. So first 2 points, I'm building up the provision. What is the principle or the provision that should be kept in mind before applying those provision and principle in the given case study. So first 2 points, students, please also don't only copy the answer, also see how I'm developing the answer. So my first 2 points, if you would have noticed, I was developing. First point was about the provision. Second point, the principle arising from that provision. Third point is applying that particular provision and the principle in the given facts of the case. And now the fourth point which I'm writing is the conclusion. So first here what I've written was about the provision. Second, students, the principle, it may or may not be required. Some of the answers would be so straight that you just need to quote the provision, directly go to the third point, which is in this case applying the provision in the given case, and the third point will be the conclusion. Here I have developed an extra point only because the term business needs to be analyzed, what exactly it means, and that is what we have given the meaning of the term business in our second point, and thereafter third point, applying those provision principle to the given case, and the fourth one is the conclusion. As I told you, again I'm repeating it, point number 2 may not be required. It depends upon the kind of question that has been targeted, and if the question is quite straight, then only the provision will be sufficient to directly answer your question, and that will then have 1, 2 and 3. 1 would be the provision, then second would be applying the provision to the given facts of the case, and the third one which would be the conclusion. Students, even in your law paper, your auditing paper, your indirect tax paper, you are supposed to build up your answer in this way. Initial lectures are going on, but I want to make your mind, I'm not only supposed to give you the knowledge of the subject, but also make you primarily very sharpen your skill about presenting your answers. Only knowledge without presentation, big zero. And you can just check out with any kind of your seniors papers. If you call their papers, their final answer may be right, but they don't know the approach to the answer, and that's where they have messed up big time. So this is one thing that we will make a very conscious attempt in our lecture to ensure that this skill set is what is something which all of you will inculcate with me over a series of the class. And this, in telling you, will go a very long way, not only for this paper, law, auditing and IDT. And that is one thing which I'm telling you, this kind of an effort is not taken even for the other subjects. What the presentation, right from the initial class, this is how you should put across. We will make the thing standardized so that there is no confusion. So the last point, students, conclusion. You can write in the pencil what exactly that point. 1 was provision, second was principle for that provision, third is the applying the provision and principle to the given facts of the case. Third one was applying the provision and principle to the given facts of the case, and the fourth one is the conclusion. Therefore, in the present case, the adventure not in the nature of business, not in the nature of trade, comma, the income arising on the transfer, income arising on the transfer of the capital asset. We can just write land instead. Arising on the transfer of the land shall be chargeable, under the head capital gains. under the head capital gains. So copy down this quickly, students. Fine, students. Okay. So with this now, students, it brings us to our topic. It's now an entry of our first topic. It's a formal entry of our first topic. And the topic that we are going to look upon is the, which one? The topic of PGBP. Let's start with that one quickly, students. Profit and gains of business and profession. Students, you will also find in your notes the topic content for that topic, so that the relevant areas which would be the page number. So the topic content is also covered in your booklet, and then thereafter herein the topic will begin. Fine. Again, the flow is important. Students, I have given the space already. Always know the space. Wherever, as a matter of a principle, that wherever you start writing, just check the entire layout of that topic. So there are certain issues in that, there are certain boxes wherein you will try to answer those issues in that particular boxes. If at all there is what? Some excess material which you are writing, then check out what is the notes page of this particular topic, not the entire book. For every topic, the notes page are given towards the end. So in this regard, students, if there is anything that is surplus made, you can always copy it over here. On that box, you can just give the reference of the page number, like 66 here, like that. Plus any other notes that you want to prepare or make it across, you can make it over here also, a separate note. Fine, students. So just this is a layout of your this particular topic. Then after, the next topic also will have its own same style of this thing, so that everything gets captured formally and finally in the topic itself. Let's start with this one now. Here, students, is your first section of the head PGBP. The first section of the head PGBP. And we all know the first section is what? It is always the charging section. Which charging section? The general charging section. So, the first section in page 51. What it says herein. So it says about also, students, do ensure to carry one marker as well in the class. It will be very handy for all of you, because we have to highlight, if at all required, some very key areas of that particular topic itself. Let's start with the students. The following income shall be chargeable to income tax under the head PGBP. The first section herein, the first clause which has been there, you can just write in this context. What is that you're going to write in this scenario? You're going to write general charging section. So this is nothing but your general charging section. General charging section. So what it says, the profit and gains of any business and profession which was carried on by the SSE at any time during the previous year. This is what is your general charging section. We will have to now analyze this general charging section one by one. Let's begin with this. Before I start with this one, students, let me try to take you something that you may have done in your IPCC. In your IPCC, students. So let us try to take that discussion first herein. And just try to recall, students, what you would have done in IPCC. Like you would have been given a question. There are two formats of the question herein, which they would have given to you. Let's look upon to that. So here it is a case of, like they would have given you accounting P&L, they would have given to you profit and loss account, isn't it? There would be like sales amount would be there, then thereafter say interest, say 1 lakh. This 1L is 1 lakh, okay, but this is just for our lecture purpose. In the examination it is 1 lakh that you are supposed to write. Then say for example dividend. So accounting income appears like this, 50,000, isn't it? Then they will also give you the entire details of your P&L debit side, and finally thereafter you would have got what? The net profit. The net profit, isn't it? So say the net profit is say 10 lakhs. So this is a profit and loss account of say A Limited. Fine. You'll prepare in the similar page, the same page which I am preparing, which technically is page number 47. So there you just prepare this thing once, and then thereafter, students, after this accounting P&L, then they would have given you, if you recall your IPCC, they would have given you in the question additional information. Can anyone tell me what is that item that you used to get in the additional information? Anyone who can guide as to which was that information that they have given in the additional information? What was there, students, in the additional information? Just think over it. You take very simple example. The simplest example that we can talk about is what? Depreciation under section 32 is this much, like that, isn't it? So like herein they would have given like 2 depreciation. So here like 2 depreciation is what they would have given, say 75,000 is what would have been debited. And in additional information, say they would have given depreciation under section 32 is say rupees 1 lakh. Apart from that, there would be various other points also that they would have given to you, and finally they would have told compute the total income. Compute the total income. This is what, and maybe sometimes tax liability also. Compute the total income. So what they have given you in the question is about the accounting income, and then thereafter they are telling you to finally compute your total income. This is what is the approach, one approach. In final CA, students, you will get the same total income question, and generally it is found that it is there in your compulsory question. Generally it is there in your compulsory question, and that is the reason why we are taking that compulsory question first up, not small topics directly, because we require that space also to solve those practicals. So computing the total income, in this regard, in final CA, the same kind of question, now how they are going to give it to you, this is how they will give it to you. They will say alternate approach of question. Now just write like this: alternate approach to the question. To the question. So what is this alternate approach to the question? See, students, I am going to do everything one step by step. Thoroughly we have to go through it. So we will not compromise on any of the part. And I'm telling you, what I'm trying to get into it, I'm telling you right now that I'm trying to ensure that by the time we are ended up with this entire very big heads of income, this is the biggest head of the entire discussion of your direct tax law. This is the biggest of the entire head of the topic. By the time, students, this topic is going to be over, the entire objective is also that you should be in a position to visualize what would be the format of your question, and 60 to 70% of data where it would be, you will always know, and you have already practiced what is the what is the adjustment that needs to be made, and it is only that 30% new information that you're going to find it in your question of that total income and tax liability. So our entire objective is for all of you to visualize where this content you are going to find in that question, what would it be, what would be the adjustment that is to be made. So if you already know and you have learned in this particular way, that you already know where the items is going to be reflected in the question, what is the possible adjustment in such cases, then what happens in that examination, you will only be left to work on the new 20-30% data which is there in the question. That's it, and the chances of you scoring full marks will then be very high. But if you only understand the provision and everything, we keep proceeding further the way every students learn in this way only. So what happens thereafter would be that there would be a lot of confusion in the examination as to I do know the provision but I'm not in a position to apply how to solve, or even though I'm solving it, there are a lot of mistakes which keeps happening, and that's where we are going to lose our marks. So this should never happen. So alternate approach to the question. What is this alternate approach I'm talking about it? It's just like this. So what they now give in final C, that your net profit, students, here it is 10 lakh, depreciation 75,000, interest is say 1 lakh, dividend is say 50,000. They will give you like this. They are going to give you the net profit. The net profit of A Limited is rupees how much? 10 lakhs. After the debit and the credit, of the following. Now do you know what they are going to do here? So the net profit, directly the bottom line, which is 10 lakhs. Accounting net profit is what they have given to you, that is rupees 10 lakhs. After the debit and the credit of the following. After the debit and the credit of the following. By doing that, students, by doing that, what they have achieved, by doing that, now they will give you only the extracts of your P&L, not that they have to give you entire P&L. Now there is no need of giving you the entire P&L. They now will only give you the extract of the debits and the credits which are made in the P&L. That way they are going to save a lot of space. Otherwise, to give you entire P&L, one entire page will go only to give you the P&L, then additional information, then total income. This becomes very dicey. So what they will give it to you like this. After debit and credit of the following, like that they were going to give it to you. Interest and dividend received of rupees 1 lakh and rupees 50,000 respectively. Thereafter, depreciation as per books is rupees 75,000. Depreciation as per books is rupees 75,000. Like that, students, now they will keep on giving you information after information. They are going to keep on giving you information after information, all the special information. I'm just giving you very common example which everyone knows about it. Thereafter we'll build up to all the typical things one by one. So this is what is the format. Thereafter then they will give you additional information after this. So additional information means what? Additional information means what? These information are generally not captured, generally. So we can just write these information are generally not captured. Where? Not captured in the P&L. but I'm just putting a caution, students, generally. Okay, so what is the additional information we are talking about it? Depreciation under section 32, 1 lakh, and some more information. After that, compute what? Compute the total income. Compute the total income. So students, this is how you're going to get your question on total income. Fine. Now you tell me, students, how you have proceeded while you started your computation of total income. How you have proceeded to compute a total income. How you have proceeded? So that A limited. So when you have started with your answer, so here it was the case of A limited, isn't it? Like systematically, previous year. What is the previous year? Say 1920. Assessment year 2021. Okay. Thereafter, what do? Make the columns, particulars. 3 columns are required. Then amount, rupees, and then the amount, rupees. Now students, I'll tell you one thing. There is also logic why we prepare this 3 columns. Somebody will say, sir, I thought only 1 amount column is sufficient. Somebody will say, I am thinking of preparing 3 amount columns. No, you'll prepare only for 2. And there is a logic why we are doing it for the 2. There is a technical logic why we are doing for 2. I'll let you know a bit later now. So how you start, students? Remember, you start with this net profit as per the books. You started with this one. How much is the amount? 10 lakhs. Isn't it? So this is how you would have started. Then what you do, students? What you do here? What do you do? Say fast. After this, net profit as per books, 10 lakhs. Thereafter, students, you do add or less. This would be your first step. Do you know what you used to do? Interest and dividend, you will exclude it from this 10 lakhs. Why you are going to exclude it? Because you will say that this 2 items of interest and of dividend is something which would be charged under the head. Which head? Under the head IFOS, and hence would be considered separately. Remember, you used to do that. By doing that, students, by doing that, what exactly you were doing was the classification. You were doing nothing but the classification. So therefore, by this plus or minus, which we are talking about it, so it is nothing but the classification. The first point of your solution, always ICAI solution, any author's particular solution, they may not go with this flow. They may come with zigzag approach, and every second answer you will find the approach changes. We will standardize so that in your examination also you will, when you read the question, you should know that these are the 3 items which are there in your profit and loss account which pertains to the classification points. And therefore you will first do the classification. That is what we will say, items chargeable under. So this is the first point, classification under other heads, to be considered separately. To be considered separately. So which is that particular point which is emerging here? So it is IFOs, interest and dividend. So it is only for right now P&L credit, but at the same time there can also be a corresponding debit of the other head's income. There can also be a corresponding debit. So if there is a corresponding debit, then we are going to again remove that particular debit from this particular computation. Remove that debit temporarily, because it would be considered under the other heads. It will be considered under the other heads. But here in my first particular case study which I am introducing, I am just giving you the income which is in the P&L credit which is classified under the head IFOS shall be considered separately. So now that amount that I have talked about it, which was, how much was the amount? 1.5 lakhs. So 1.5 lakh students is the amount. This gives you how much? 8.5 lakhs. What is that you're going to say about this 8.5 lakhs? What this 8.5 lakhs would be known as? What this 8.5 lakhs would be known as, students? Fast. What it would be known as? It would be known as, again it is an accounting profit. Again this is what? Accounting profit, net profit as per, net profit, sorry. Net profit as per the books, that is as per the accounting profit for, but for what? For business. Now you are getting into the relevant area. So by doing the first step, which is classification, where you have arrived is again the accounting profit itself. You have arrived at the accounting profit, but this accounting profit is to do with the business. And thereafter, students, what do you do? Remember what you used to do thereafter? Then you thereafter used to add or less. Primarily, what? Here is adjustment. Adjustments under section 28 to 44, sorry, section 28 to 43D. So in my particular, if you see here, what is to come? So what is the adjustment that we will make in our particular case study? What is that adjustment to be made in our case study? Adjustment relating to 28 to 43D. You will say, why 43D? Because I am giving you the range of the adjustments under the head PGBP. These are the range of the sections which are under the head PGBP. Thereafter 45, we all know, from 45 the capital gains, the head capital gains begins. From 56 the head IFOs begins. So therefore this is the range of the adjustments or the provisions under the head PGBP. So which is the adjustment, by the way, in this case study? Which is the adjustment, by the way, in this case study? And the adjustment is, primarily we all know, we are in depreciation as per books. As per books. Isn't it? So that is here. How much is that? 75,000. So add depreciation as per books and less what? Depreciation under section 32. How much is that? 1 lakh. You will give the other adjustments, isn't it? And finally thereafter, like that, you will arrive at what? You will arrive at PGBP. And what will be the PG here? Other adjustment also in the similar way. You will do the adjustment as per the question, and finally then you will get what? The PGBP. So say for example here, at least for this question, your PGBP is how much? 8.75 lakhs. Sorry, 8.25 lakhs. So 8.25 lakhs is your PGBP. Thereafter, if you see the IFOS part, how you go about in doing IFOS, so there is a dividend income, which is 50,000 inner column, 50K in the inner column. Dividend income inner column. I'll just write it in the other sheet for dividend income. So here, so IFOS, just putting that IFOS, so here dividend in the inner column 50,000 less than exempt under section 1034 50. This is nil. Thereafter interest was how much? 1 lakh. Okay, and that will give you IFOS of final 1 lakh, isn't it? Then thereafter, these are the only two heads in my particular case study so far. Thereafter, this will be known as gross total income. So this will be known as your GTI, and your GTI now is how much? 9.25 lakhs. From that, you go ahead and do what? Chapter 6A. deduction, chapter 6A deduction, which right now in my example it is nothing, and finally you get what? The total income, which is, this is the approach, but you all were doing it in your, this is the approach. Be careful, students. So first step that you did, that you have to always do in your computation of total income from your accounting income, in your process of computing the total income, the first step that you are doing is nothing but the classification. Check out the P&L credit and the P&L debit, which are charged under the other heads, and hence they are considered separately, which are charged under the other heads, and hence they are charged separately. And then, as I told you, the next particular point, which is the amount that is arrived after this classification adjustment, that amount would be referred as still an accounting profit, which is a net profit as per the books, but now this is for business. Then what you do thereafter, the adjustment relating to PGBP, and then finally you get your PGBP income. Then you take up the other heads, get the income of the other heads, GTI, chapter 6A, total income. So accordingly, now on that note, why I have made you do this case study, just to highlight the point that in my computation of my total income, the very first step that we will do would be that of the classification, and thereafter computing in the manner laid down under the Act. This is what the total income definition was all about. 1, 2 and 3. What was the third point? The qualifying amount will be computed in the manner laid down under the Act. And when you do the computation, which is this, when you do the computation, which is this particular computation that you are doing, the very fact that when you are computing the total income, the first step in computation of total income has to be always a classification. Classification, specific charge, general charge. So here in my example, there was a specific charge which I have put forth on interest and dividend, and that is what has been eliminated. And then finally the balance amount which is there is being referred as the particular case of net profit as per the books, and this is how we have proceeded. And then this computation which we will do it is in the manner laid down under the Act. So once you get the amount, you are doing the computation in the manner laid down under that particular head. And this is the manner for PGBP, similar would be the manner for IFOS, so on and so forth. With that then, students, let's come to this particular charging section again. And what it says profit and gains of any business and profession which was carried on by the SSC at any time during the previous year. Profit and gains of any business and profession which was carried on by the SSC at any time during the previous year. So in this context, students, the charge under the head PGBP is on what? Profit and gains. Now what is this profit and gains? What is this profit and gains? This is what we need to think about it. Now students, if all of you have come down over here, I'll ask you one more question. All of you, are you ready for it? Ready for it? Fine. Now just be careful. We will first do this profit and gains. Thereafter then we will take a break. Okay, but first would be profit and gains would be analyzed comprehensively, and this is such a major analysis. So students, here 2 depreciation 75,000. In this context, if I say to you, if there is a debit of 2 loss of stock by fire, there is a debit entry of rupees, say 2 lakhs. So there was a stock which got lost by fire, and accordingly the SSC has made the debit of this loss. My question to all of you is this: under the head PGBP, is this loss allowed to you as a deduction? Under the head PGBP, whether this loss, is it allowed to you as a deduction? This is my question to all of you. What do you say, so? Under the head PGBP, whether this loss, students, is it allowed to you as a deduction? Is it allowed to you as a deduction under the PGBP? Or shall I now put it in another angle? Can anyone in the class tell me, if you want to get the break, then you have to also answer the questions. So are you ready for the question, by the way? Can anyone tell me under which section that this loss of stock by fire will be allowed to you as a deduction? Under which section? Sir, you can ask us anything. We are repeating again and again to you. You can ask us anything, but please don't ask us the section number. That is what students are saying right now. You all are saying the same thing. Because whenever you ask the section number, we always feel offended. Is the students' demand that never ever ask any section number to us. That is the first condition of our lectureship, isn't it? But I also have got my own ways of memorizing you those section numbers. It will happen, but right now I'm trying to only test how many of you can give me the citation of the section number where this particular loss of stock by fire is covered as a deduction. Where it is covered as a deduction? Many students now, they are suggesting or saying that this amount is allowed as deduction. Sir, we remember only few sections we did in IPCC, and out of those few sections, the one section that we did thoroughly was section 37.1. And what is that 37.1? The general deduction is what we did. And in that, we think, students are saying that they think that this particular loss of stock by fire will be allowed as deduction. So whether under 37.1, students, is it allowed to you as a deduction, by the way? Under section 37.1, is it allowed to you as a deduction? To that, students, the answer is obvious no. It is not allowed to you as a deduction. Why? Because 37.1 requires the expenditure to have been incurred. The deduction of 37.1 is in respect of the expenditure, and the term expenditure is different from the term loss. Again, I'm repeating, students, the term expenditure is different from the term loss. So therefore 37.1 is not the correct section where this loss of stock by fire will be allowed as deduction. So again, the question therefore is, do we have any specific section under the head PGBP where this loss of stock by fire will it be allowed as deduction? Do we have any section? And students are wondering, no, they are saying that we don't recollect to whatever the best that we have read it. We don't recollect that there is any section which is covering this loss of stock by fire. Very true. I accept that, and what you are saying is completely correct. There is no specific section which covers this deduction of loss of stock by fire. And also, students, I have disqualified even 37.1. 37.1 is not going to be applicable in this case, for the only reason that 37.1 talks about the deduction of an expenditure, whereas right now we are talking about the deduction of a loss. So if it is neither specifically covered under the head PGBP nor it is generally covered under the head PGBP, then shall we disallow it? Then shall we disallow it, because it is neither specifically covered in any of the section nor it is generally covered under 37.1. So shall we disallow the deduction of this particular expenditure is my question to all of you. Shall we disallow, students? Shall we disallow? And the answer is no, we are not going to disallow this particular expenditure. And what is the reason for it? What is the reason for it? The reason is, be careful. The reason is, there is one section which is section 145. It is there in our notes. I'll make you read. But let's first capture the concept. As per section 145, it says that in computing the income under the head PGBP and the head IFOS, the income in these two heads shall be computed as per the commercial accounting principle. So the income under these two heads will be computed as per what, students? As per the commercial accounting principle. So as per the commercial accounting principle, you will compute the income under these two heads. And students, when you talk about, so therefore the amount which is charged under the head PGBP, the amount which is charged under the head PGBP is nothing but an accounting income of that business on which you are doing the adjustment. The amount which is chargeable under the head PGBP is nothing but an accounting income of the business on which you are doing the adjustments. If you see my format, which I've just have shown to all of you, for PGBP students, how we have gone with it. Net profit as per books for business, and then we did this adjustments. So my base is what? 8.5 lakhs. My base is what? 8.5 lakhs. What is this 8.5 lakhs about? It's an accounting income. Accounting income. And on that accounting income, I am doing what? The adjustment. Students, if I ask you under the head house property, how you used to calculate house property income? How you all used to calculate the HP income is my question to all of you. So the HP income, if you remember, the way you used to calculate was GAV against this less municipal tax paid. Then you used to get the NAV. After NAV, standard deduction. Then interest. What I'm trying to tell you, for your head house property, there was no base amount on which you are doing the adjustment. In fact, under the head house property, right from that first value, what was that first value? GAV. How to calculate the GAV also was being told to you. The first value, which is the revenue of the head house property, known as GAV, even that value, how to calculate, was being told to you. And from that, municipal tax paid, reduced, used to get NAV, standard deduction, interest calculation. A short point which I am raising to all of you is this, that in the head house property, was the accounting income considered? In the head house property, was that computation that you did under the head house property was anyway being influenced by your accounting principles? And the answer is no. One more head, capital gains. Remember capital gains. How you calculate the capital gains? How you used to calculate capital gains? In that capital gains, did you had any base amount on which you did the further adjustment? In the head capital gains, did you had any base amount on which you gave the further adjustment? Again, the answer is no. Under the head capital gains also, you never had that base amount. And hence, in the head CG, what you did was the first value, full value of consideration. How you determine the FVC was also, how you determine the FVC was also provided to you comprehensively under that particular head. Thereafter, if you remember, less expenses on transfer, then you used to get the net sale consideration, and from thereafter, cost of acquisition, cost of improvement, and the capital gains. And what would be the cost of acquisition? What would be the cost of improvement? Even those items was being given to you in a specific manner. Even those items were given to you in a very specific manner. And therefore, students, the point which now that we are discussing is that these items which are there under the head house property or the head capital gains, we are working or we are actually computing. We are actually computing right from the first value till the last value. That is the actual computation that we are doing. Whereas PGBP and the head IFOS, there is no actual computation that we do. PGBP and the head IFOS, there is no actual computation we do. What we do in PGBP and IFOS is nothing but net profit as per books, and from that net profit as per books, we are doing the statutory adjustments. That's it. So the net profit as per the books for the business, we are doing the adjustments. From where we got this mandate to pick up, from where we got this mandate to pick up the net profit as per the books as my base value, I got the mandate to pick up the net profit as per the books, which is my base value. This mandate has been given to me by section 145. And what this section 145 says? That in determining the income under the head profit and gains from business and profession and the head IFOS, you shall take into account the commercial accounting principles. And therefore, students, this profit is your profit as per the commercial accounting principle. This profit is what? The profit as per the commercial accounting principle. And on that accounting profit, we do the adjustments. Now, when I talk about, students, I'm going to give you the notes, but just last point. Just be careful, students. When we talk about this one, in this context, the commercial account, what do you mean by commercial accounting principle, by the way? All these are the things, 10th, 11th standard, 12th standard, BCom. You have trade, commerce. Everyone have heard this million of times. Commercial accounting principle, millions of times. But never have given a serious thought as to what you mean by the term trade. Today we came to know that trade means this: systematic activity carried on by a person by applying labor, skill and resource with a view to earn profit. That is what the trade means, and that is how it will become a business. Same way, what is the commercial accounting principle, students? Commercial accounting principle, students, if you see here, we all know, students, the profit and loss account that is there is in two parts. One, this item, the first part is that of what? The trading items. The first item are those related to trading items like opening stock, closing stock, sales, purchase, etc. Isn't it? This is about the trading item. Then thereafter, the second part, which is there in this context, the second part which is there in this context is what? Is items which are incurred. Items which are incurred in the normal course of business. In the normal course of business. So second part in this regard, students, is those items which are incurred in the normal course of business. Isn't it? So this is what is your commercial accounting principle. I am just using the abbreviation. And principal, students, don't write your boss name. Principal is PLE, not PAL. And do know that your boss is someone to whom you love the most, your principal. But commercial accounting principle is PLE. Okay. So students, I want you, before I start giving you the notes, just in your note section, that towards the end of the topic, I want you to capture this first. And what is this? Give the heading: commercial accounting principle. Give the heading: commercial accounting principle. And prepare this particular format. So in this topic, towards the end of the topic, that detailed note section, there, we'll just make this format. I want this format to be made. All of you, quickly do this. This is items which are incurred in the normal course of business. Items which are incurred in the normal course of business. Okay. So students, in this context, now coming back to our question. The loss of stock by fire. Loss of stock by fire. Where it will go? Here. To loss of stock by fire. To loss of stock by fire. Say 1 lakh. So is this a debit as per the commercial accounting principle? Is this the debit as per the commercial accounting principle? And the answer is yes. Why? Because it is a part of your trading item, and because it is a part of your trading item, therefore this debit is a part. This debit is as per the commercial accounting principle. And then what I told to all of you? I told to all of you was that this particular amount which has been there, the net profit should be as per the commercial accounting principle. So is your net profit after debiting rupees 1 lakh towards the loss of stock by fire, after debiting that rupees 1 lakh, is that net profit, is it as per the commercial accounting principle? And the answer is yes. And then what you do? Give the adjustment. And in the series of adjustment of the head PGBP from 28 to 43D, we don't have, mark my words, we don't have any provision which disqualifies or disallows this expenditure, or sorry, this loss. So my net profit is as per the commercial accounting principle, and thereafter the adjustment which I am doing under the head PGBP, there is no provision under this head which disallows this loss of stock by fire, which implies my net profit has been prepared as per the commercial accounting principle, which is the mandate of section 145, and on that mandate I am doing the adjustment. And while I do the adjustment in that head PGBP, there is no provision which specifically disallows this particular loss of stock by fire. And if this has not been disallowed by a loss of stock by fire, accordingly what happens? The PGBP computed is the correct PGBP, primarily because of this particular reason. So loss of stock by fire, there is no provision which is actually there in the head PGBP which disallows, and hence this deduction is allowed to you. Allowed to you on what basis? This deduction is allowed to you as per the commercial accounting principle, which needs to be considered while determining the income chargeable under this particular head, because it is on that income which is as per the commercial accounting principle, it is on that income that we are giving the further adjustments under that particular head PGBP. So loss of stock by fire will be considered as an item eligible for deduction as per the commercial accounting principle. Students, herein see the point which has been given over here. Subject to the other provision of the Act, profit and gains shall be arrived by applying the commercial accounting practices in order to ascertain the real profits. Okay, and this is as per section 145. So method of accounting primarily, which is also ICDS, which we will take it after the break. So but students, the first point which is given over here, loss of stock by fire. So just write the answer quickly and then we will hit the break. Point number 51, page number 51, students. So here the first point, you write first refer the table, and that table we all know where it is. That table, students, that we all know where it is. So first refer that table, page wherever you have prepared, that commercial accounting principle table. Fine. And thereafter continue writing the page wherever you have written that table. Thereafter you will continue writing as per section 145, as per section 145 As per section 145, the income chargeable, right? Some small letters I am writing it. I have to write it primarily with the normal large font because obviously the visibility. But you will write normal font, small font, so that you have to write 3 answers. As per section 145, the income chargeable under the head PGBP and IFOS shall be determined having regard to the commercial accounting principle. Having regard to the commercial accounting principle. The deduction. This is deduction of the loss of stock by fire is the deduction of the loss of stock by fire is as per what? As per the commercial accounting principle, being a trading item. So why it is as per commercial accounting principle? You have to give the reason also. Why it is as per the commercial accounting principle? You have to give the reason as well. And the reason that you are going to give is that it is a trading item. Right? Further, there is no specific provision under the head PGBP which disallows such loss. Hence, even though the said loss is not specifically allowed, even though the said loss is not specifically allowed, not specifically. Why? What do you mean by not specifically? Means there is no specific provision for its allowability. Even though the said loss is not specifically allowed as deduction under the head PGBP, its deduction is covered. Its deduction is covered under. Deduction is covered as per what? CAP, commercial accounting principle. Fine, students. So hence, even though the said loss is not specifically allowed as deduction under the head PGBP, its deduction is covered as per the CAP. So this is what, students, it's all about. So I hope that you have got hold with this particular provision. So this is what it is. All of you will take a quick break. There is no part B of this video. So it's a break means a normal break. So you ensure to be here by 10 minutes. In 10 minutes time you should be all here in your class. There is no particular part B of this particular video. So in the next this thing you will find that some videos are at a continuous stretch. So students, 10 minutes time. Please do come back quickly and we will continue our discussion. So welcome students. So now in this category students, we have dealt with this particular proposition of the deduction of losses or the expenses not expressly allowed. So loss of stock by fire is one of the particular points that we have discussed. Now if I ask you students, in the same way, what about the loss of, if there is a debit in the profit and loss account, there is a debit entry which is about loss of plant and machinery by fire. So if there is a debit which is in relation to the loss of plant and machinery by fire, question to all of you therefore is whether that debit will it be allowed to you as a deduction? Whether that debit will that be allowed as a deduction or not? What is the debit? In that fire, even the plant and machinery was also lost. In that fire, that plant and machinery was also allowed, was damaged, was lost. And the company, what they did, they claimed a deduction, they claimed a debit of that particular plant and machinery in their profit and loss account. So the question, students, to all of you is whether that debit will that be allowed as a deduction. So looking into first commercial accounting principle, is that debit, students? Is that debit? Is it as per the commercial accounting principle? That's the first question to be answered. Is that debit, is it as per the commercial accounting principle? To that the answer is no. Why it is not as per the commercial accounting principle? Because we all know that the loss of plant and machinery by fire is neither a trading item. Plant is not a trading item. It is neither a trading item nor an item which is incurred in the normal course of business. It is neither a trading item nor an item which is incurred in the normal course of business, and therefore what? This loss is a capital loss. I think all of you right from your 11th standard again, you all are hearing this word. Which word? Capital loss. That word capital loss is what you all are hearing, isn't it? Now what exactly the capital loss word means? This is what it means, that such loss is neither a trading loss nor it is incurred in the normal course of business, and hence it becomes a capital loss. So the capital loss will not be allowed as deduction as per the commercial accounting principle. That is our first point, because first of all we need to check out whether in that base, which is, what is that base? The base which is the net profit as per books, can that be accommodated? And the answer is no. Why it cannot be accommodated? Why it cannot be accommodated? Because it is not as per the commercial accounting principle. If it cannot be accommodated, then our second question, what is the second question, students? The second question is, can we have a specific adjustment of, if it cannot be accommodated, then the second question to be answered is, do we have any specific adjustment under the PGBP? Are you aware in IPCC you have learnt any of the adjustment in PGBP which says that loss of plant and machinery is allowed as deduction under this section, under a particular section of PGBP? Have you came across with any of the section in PGBP which used to say loss of plant and machinery by fire is allowed as deduction? And the answer is no. So therefore, students, it is neither allowed as per the commercial accounting principle, nor there is any specific provision, under the head PGBP which can accommodate its deduction. And therefore what? Therefore such loss is not allowed as deduction, and if it has been debited in the profit and loss account, means your net profit is reduced. So if it is debited in your profit and loss account, then what is the treatment that you are supposed to give? in computing your PGBP? What is the treatment that you're supposed to give in computing your PGBP? The treatment will be add back. So your treatment, students, will be to add it back. So coming to this particular point, I'll give you the notes, but just have a look here. Read this point 2 and 3. So students, in point number 2, in your point number 2, so what they have mentioned in this context, forfeiture, there is a same point but in a different twist. Forfeiture of advance money towards procurement of plant and machinery. So I went to buy the plant and machinery, for which I have given the advance. I have given the advance to my supplier. Say Larsen and Toubro is the supplier. To them I have given the advance money. Somehow I could not take the delivery. I could not proceed with that particular contract. And therefore, Larsen and Toubro, what they did, they have forfeited that particular advance money. So for me it's a loss. And that loss I have debited in my profit and loss account. So what should be my approach? Is this debit as per the commercial accounting principle? That is my first point. Is this debit as per the commercial accounting principle? So ask the question, which is the question to be asked? Is it a trading item? And the answer is no. Is it an item which is in the normal course of business? And these are not transaction in the normal course of business. And hence, this debit of loss towards the forfeiture of advance money is not as per the commercial accounting principle. That is the first point. Second point, students, now check out, do we have any specific provision under the head PGBP which grants the deduction of such loss? Do we have any specific provision under the head PGBP which grants the deduction of such loss? Again, to that the answer is no. There is no provision under the head PGBP which grants the deduction of such loss, and therefore finally to conclude what? That such particular loss will not be allowed to you as a deduction, and if it is debited to your profit and loss account, thereby you have reduced your net profit. So what is the treatment that you are supposed to give? The treatment you are supposed to give is add back. Add back, students. So there, please take a note of this one. Now point number 2, if the space is less, then what you will say? Point number 2, refer the answer where? In your detailed notes. So detailed notes towards the end, please, you can make a reference of that. Please write. Loss on account of forfeiture, loss on account of forfeiture of advance money, forfeiture of advance money paid, advance money paid towards the procurement of the plant and machinery is not allowed as deduction, on account of what, students? Point number A. Not as per cap. Such loss is neither a trading loss nor or loss arising in a normal course of business. Hence, it is a capital loss. Hence, it is a capital loss. Point number B. No specific provision. See, please mark, students, how I am writing the answers. No specific provision. You have to develop the reasons, the ability to qualify your answer in a very robust manner. And I'm telling you, it's not a big thing which I'm saying, it's telling you, you develop this. You will not have the competition in your center, in your city, or in India. I'm telling you because I was the best paper award in this particular subject. My students have scored 94 in this particular paper. So you can just imagine what would be their answer. And they also got the best paper award. And my boss in EY got 99, and he definitely not only was the best paper award, he was all India one. So just this is what is required. And for such answer, even though the ICAI has to come down the results to 2%, 3% or 1%, those who write these answers, they will always qualify. And others who write even the right answer, but final answer is right, but their approach is not proper, not professional, they will always struggle. Not only in their CA examination, but also in their life. Even in post qualification, they will definitely find it very difficult to get going. And that is one thing, students, as early as possible at your age, sort it out, all these things, because it's not only about CA, it's going to go miles forward in your professional life. So no specific provision, students. So right here, further, in respect of this I.R.O is a standard abbreviation which you can use even in examination. This you can use in examination. I.R.O is in respect of. Further, in respect of such capital loss, there is no specific provision. There is no specific provision under the head so underline the word no specific, which provides the deduction, So this is what, students, you are supposed to make a reference as far as your answers are concerned. Okay? All of you have copied down this? Students, always use the statement not as per commercial accounting principle. What I have written, such loss is neither this nor that. Can you appreciate this term? Whenever you use the word neither, always follow it up with nor. Neither this nor that. And definitely I will have to say neither as per trading, neither it's a trading loss nor a loss as per the commercial accounting principle. Sorry, nor a loss which is arising out of the normal course of business. So neither this nor. Whenever two things has to be taken together, please use this term. Will definitely be very helpful for all of you. So coming back, students, here in this regard. So deduction of losses or expenses not expressly allowed. So loss of stock by fire. Forfeiture of advance money towards procurement of plant and machinery. We have written that. Exchange rate fluctuation towards procurement of raw material. So there is an exchange rate fluctuation towards the procurement of raw material. So what is that you are going to say about it? Exchange rate fluctuation towards the procurement of raw material. Will that be allowed to you as a deduction, exchange rate, and the answer is yes. You all know the reason. Reason is such loss is a trading loss. So just take a note of this one quickly. Allowed as deduction, the third one, since such loss is a trading loss and hence as per commercial accounting principle. Further, there is no specific provision under the head. No specific provision under the head which disallows the deduction of such loss. So there is no section under the head PGBP which is disallowing the deduction of such loss. So again we will say, because of this reason, we will say and finally conclude that it is allowed as a deduction. It is allowed as a deduction. Did you all got this one, students? Fine. Now one last point which is actually there. I've given some case studies also towards the end, some more practical adjustment. Students, you remember in your TY/BCom or maybe even in your IPCC, you have taken to account one very popular adjustment was being given to you in your IPCC. Which was the adjustment? Do you remember the adjustment? TY/BCom? Opening stock and closing stock were undervalued. Remember? That was one of your favorite adjustments, isn't it? So you know what you have to do for that. So what is that you have done in this regard? Opening stock and closing stock was undervalued or overvalued. So in that regard, you did those reconciliation. Because of undervaluation, whatever was the amount for which it has to be net added or net reduced, whatever it has to be done, you have done that adjustment. Can you tell me under which section you have done that adjustment? Under which section you have done that adjustment is my question to all of you. Can you say that? Under which section you have done that particular adjustment? Under which section you have done that particular adjustment? No, you don't remember that. There is no such section at all. Why? Primarily because these adjustments are to be done as per the commercial accounting principle. These adjustments are to be done as per what? As per the commercial accounting principle. So that add or less, whatever it is, the final effect to be given, that adjustment that you did, you are not conscious. You have already by hearted that provision or the treatment, but that adjustment is as per what? As per the commercial accounting principle. So be careful, students, on that particular point as well. So this is what the point is. Again in final C also they will say, they will give this adjustment in your total income, and they give this information in the additional information that you find this adjustment, and they say in the additional information in that question that opening stock or the closing stock is under or overvalued. So what we do this net effect that we have to take into account, and when you do the net effect, then you will say this adjustment is for determining the profit and gains as per the commercial accounting principle, because that is the base value. So if your base is not correct, then it will definitely have an impact on your final provision of your PGBP. So it is like this, that students, in your PGBP, 60 to 70% of your adjustment depends upon the commercial accounting principle, and the balance 30% depends on what? On the specific provision of this particular head. On the specific provision of this particular head. This is not the case with the other two heads which I have mentioned, and those two heads were house property and capital gains. Their entire computation was 100% computation was as per the specific provision in that particular head. 100% computation was as per the specific provision in that particular head. So this is what finally the conceptual memory you should always keep in mind. You should always keep in mind this particular part. In PGBP IFOs, 70% of that final profit depends on the commercial accounting principle, and the balance 30% of that final profit depends on what? On the specific adjustment in that particular head. Fine, students. So this is how it has to be considered. Now I have given more examples in this regard, which is something just now once you have understood the principle, you can keep playing with the examples. Now it will be like only one single reading that you may have to do. After that you may not have to read it. Why? Because you have already captured the principle now. Keep that in mind, and this is the most important thing. Now students, coming back to this particular point, come back to your particular theory which has been given. So exchange rate fluctuation is over. Now here point number B has been mentioned. Let's first read the question, and then thereafter I will be putting forth my observation. First students, is this particular question whether liquidated damages received by a company from the supplier of whom? Of plant for failure to supply plant and machinery to company within the specified time. Liquidated damages means what, students? What is liquidated damages? Means the contract may have been cancelled, and because the contract may have been cancelled, therefore what? Therefore this particular customer has gone to purchase what? Same plant and machinery. In my same example which I gave you just in the previous page, that example was I being the customer went to the supplier, I gave the advance, and it was because of my default that the supplier has forfeited that particular advance money. It was because of my default that the supplier has forfeited that particular amount. In this case, what is happening? It is because of the default of whose default? Because of the default of the supplier. Because of the default of the supplier, that the supplier is giving me the liquidated damages. And that is, students, that is what? That is in respect of plant. That is in respect of plant. Now what is that we have said, students, here? What is that we have said for this one? That this loss is a capital loss when the forfeiture has happened. Why it is a capital loss? Because it is to do with plant and machinery, which is neither a trading item nor a something which is in the ordinary course of business. Similarly, what about this one? Liquidated damages from the plant and machinery. If it is credited in the profit and loss account, because I've received here, so you tell me, is it a trading item? And the answer is no. Is it an item which I have received, or is it an amount which I have received in the normal course of business? Again, the answer is no. Since both the answer in this case is no, therefore we will say what? That it is it is not as per the commercial accounting principle. This amount which is credited in the profit and loss account of the books is not as per the commercial accounting principle, and because it is not as per the commercial accounting principle, therefore we will conclude that it is a capital receipt. And students, capital receipt, remember the first class what I told you? What is income? What is income? Income is revenue receipt plus specified capital receipt, meaning thereby only those capital receipt which is defined as an income and made chargeable to tax under the Act, and made chargeable to tax under the Act is what will be chargeable. Other than that, all the other capital receipt will say what? No, it is not chargeable to tax under the Act. This is what we will say, isn't it? All the other capital receipt, we will say it is not taxable. Why it is not taxable? You now get the reason. Because it is neither a trading item nor an item which is incurred in the normal course of business. Hence, being a capital receipt, it cannot qualify as an income. But if the government wants to tax it, can they do that? If the government wants to tax it, can they do that? Yes, they can do that. But to do that, they require specific provision where they will make that capital receipt as the income, and thereafter they will target one particular head. And in that head, they are going to put that amount for the purpose of chargeability. At least I will just first give you, I'll want to show you something, but before that, I'll just answer now whatever we have discussed over here. This one, I'm just going to come, but before that, just try to take an answer of this. The liquidated damage are in respect of a contract of plant and machinery. A contract of plant and machinery. Plant and machinery purchase. The liquidated damages are in respect of a contract of plant and machinery purchase. Plant and machinery purchase. Full stop. You do full stop. After that, right below this, the amount received is neither a trading receipt nor a receipt in the ordinary course of business. Hence, such amount being a capital receipt is not chargeable under section 28. Hence, such amount being a capital receipt is not chargeable under section 28(1). Fine, students? Have you all done this? Okay. So if you are all through with this one now, I want all of you to read one thing, and that is in page 57. It is a second particular point, and in that second point, I want you to read point number E. Second point, point number E. Read, students. Fine, students. So in this context, if you see herein, which has been given to all of you, this, can I say this receipt is arising from a contract of business? Can I say this receipt is arising from contract of business? That's a different thing that it is a capital receipt, but is it arising from a contract relating to his business? And the answer is yes, because it is arising from a contract which is relating to his business. Therefore, we will conclude what? That this amount is specifically charged under section 28(2). And I told you it would be like, I can say, if you see the definition of income under 224, now you tell me, students, if you see the definition of income under 224, will you find this entry as well? And the answer is yes. Why? The lawmaker or the parliament would have defined this amount as the income first. Because they do know, if they don't do that, then they will never get the mandate to tax the same. And that is the reason why they have defined this particular amount as the income first. And thereafter, they will have to target a suitable head. Which head is more appropriate? PGBP. And that is where it is specifically charged. So this is again a first example of a specific charge that you have got under the head PGBP. Now the other special point in this regard is about that it is only in respect of business. And be careful, students, although this head is for both business and profession, but some provision are exclusively in respect of business and not for profession. Exclusively in respect of business and not for profession, or vice versa. And therefore here you have to be careful, and accordingly this observation has been given. Had it been in the case of a profession, then in this case 28(2)(e) will not apply, which implies that it is not chargeable to tax. Students, before we proceed here, I'll just give that writing. Don't worry, I'll give you in writing. I want to understand from you what is the logic behind this particular, why the government have introduced this particular provision. Government would have gone, they would have had their own thought before they could have taxed this particular amount. So my question to all of you is, what is that thought in the mind of the government to tax this particular amount? What is that in their mind to tax this particular amount? Anyone who can answer this one? Why they have made this as taxable? What could be the logic which the government had to make this amount taxable? What is that would have been in the government's mind to make this amount taxable? So students, be careful. The thought which the government had to make this amount taxable was this. And what was that thought in this regard? Students, income tax is a zero-sum game. Heard of this phrase? Income tax is a zero-sum game. Heard of it? Not yet. Zero-sum, S-U-M, game. Like in this case, if there is a seller, then there is a buyer, isn't it? So seller, for him it's an income and it is taxable. For the buyer, it is an expenses. So this buyer will claim a deduction. Like that, isn't it? So the buyer will claim a deduction. For him, seller, he would have paid the tax on the income. The buyer of this particular contract, he would have claimed that as an expenses and would have claimed a deduction. Now just imagine in that example, I as a buyer went to L&T. Now, the point was is that when I am going to the L&T to buy the plant and machinery for which I have given the advance money, that advance money was subsequently forfeited by L&T. Now, for me, so not forfeited, sorry, the L&T gave me the liquidated damages on account of cancellation of the contract. Now, for me, it is a capital receipt. For me, it is a capital receipt, isn't it? What about for L&T? For L&T, is it a capital loss? If for me it is a receipt, somebody will have its loss, and somebody here is L&T. Is for L&T this amount that they have paid, is it a capital loss? Is it a capital loss? For L&T I'm talking about it. For me it is a capital receipt. Okay. What about for L&T? For L&T it is not a capital loss. Why? Because for them that machinery is a stock in trade. For L&T that machinery is a stock in trade. So that is a loss on account of a trading transaction. So these are incidental trading loss. So do you know what used to happen? L&T herein, L&T used to claim as a trading loss, incidental trading loss. L&T used to claim for a trading loss. And they used to get a deduction also. And what about for the buyer? For the buyer it was a capital receipt, and we all know, because for him it was a plant and machinery, and plant and machinery was, this part was neither a trading item nor something which is in a normal course of business. So therefore it was a capital receipt, and hence it was not taxable. So the government was losing out on the revenue. On one side somebody is claiming a deduction, and on the other side the amount which has been received by the other party, they are not even paying the tax on that. So therefore they introduced this clause E in section 28.2 to specifically charge such capital receipt. So they have introduced specifically in that particular clause. Which clause? Clause E of 28.2 to specifically charge this capital receipt. So this is now, we can say it's now even out. How it has evened out? Because L&T claims a deduction. For them that machinery forms a part of their stock in trade, trading item. So for them it's an incidental trading loss allowed as per the commercial accounting principle. And for the other, the buyer who has received that liquidated damage, for them it is a capital receipt which is now specifically charged to tax. So therefore it's like what? It has evened out. And this is the reason why the government introduced this particular amendment. So this is an important point, that why, so we should look from the entire parties to the contract, how they are being placed about such expenditure, such loss or such gain. So if you look from both the angle, then you will come to know why they have created or introduced this particular provision. So this is the why of the amendment, and this amendment, students, actually was introduced in the last year, Finance Act 2018. Okay, so last year this particular amendment was introduced, so it's a very recent amendment to that extent. So anyways, so you can just write the brief, one couple of liners on the same. Just students take a note on this particular point. Here in your writing, come back to your write-up. You have made a mention of 28.1. Thereafter, however, section 28.2 clause E has created a specific charge, in respect of liquidated underline the word specific charge, in respect of liquidated damages received on cancellation of any business contract. Hence, the said capital receipt CR, hence the said capital receipt is specifically charged to tax. Hence the said capital receipt is specifically charged to tax. So students, we have done with this particular point now. Okay. Now just take this particular point number B, the first bullet point. What it says: amount collected by company from its customer on ad hoc basis. Students, let me do this particular part in the next particular lecture, which I will do that. It doesn't mean the lecture is over, because I want to introduce very important point, because I need a closure right now about the concept. I'll take this particular thing in the next particular session itself, but right now students, just focus on one important point which I wanted to discuss with all of you. That is about the concept of an ICDS. Students, why ICDS has been introduced under the Income Tax Act? This needs to be appreciated, because today we are discussing that particular concepts. It is important to introduce the ICDS for why the ICDS is introduced, the why of the ICDS. We all have, students, just now I told to all of you that the profit and gains which is finally chargeable, under the head PGBP is 70% influenced by commercial accounting principle, and only the balance 30% is what? The balance 30% is for the specific adjustment which is there, under the head PGBP. Because see, if you see the list of the section from 28 to 44, 43D, because 44 is the books of accounts, presumptive income, all that. So 28 to 43D, the list of the sections are very limited. And that is why I said to all of you that 70% it is influenced by what? 70% is influenced by ICD, the commercial accounting principle, and 30% only by the specific provisions. When I use the term commercial accounting principle, I also mean that, be careful now, when I'm using the term commercial accounting principle, I also mean that it takes into account all the accounting conventions, accounting standards. The commercial accounting principle, when this phrase is used, it will take into account all the accounting conventions, accounting standards and all. Let's take one standard, student, revenue recognition. Now, we have accounting standard 9. Revenue recognition, accounting standard 9. Now, as far as the service contract is concerned, the service contract, if you recall, if you have done in IPCC AS 9, then students, the revenue recognition that is there for the service contract, we have got two options. And which are those two options? The first option being the percentage of completion method, and the second option is the completed contract method. So we have two options, percentage completion method and the completed contract method. Let's take about one example. I'm giving a very simple example that you can pick it up fast. Just pay attention to this example. Like students, there are certain coaching institutes, CA coaching institutes, at least I can say in Mumbai. Like what they have, that once the students clear their IPCC or intermediate, they actually have got all the 8 papers. They actually train for all the 8 papers. So their entire focus is to train the students on their entire 8 papers. So they don't offer subject-wise admission. So they are offering for entire CA final. Now when the students clear their IPCC intermediate, they enroll for these classes. Now for that, say they are paying a lakh of rupee. Now understand that those 8 papers will get covered in that 2 years point of time. Those 8 papers will get covered in the 2 years point of time. Accordingly, what these coaching institutes are doing so far as the revenue recognitions are concerned, these coaching institutes, to recognize the revenue in their books of accounts, they have got 2 options, and the options are: number 1, completed contract method, and second one is the percentage completion method. What do you think they would have been following? Will they be following the completed contract method, or they would be following the percentage completion method? What is that they would be following? This is the question. What is your take on that? Completed contract or percentage completion? And these coaching institutes are following what? Completed contract method. It implies that in the first year, even though they may have completed 70% of the syllables in the first year itself of the 8 papers, 70% of the portion is over, but they will not recognize even a single rupee in the year 1. Entire income of that rupees 1 lakh would be recognized as income only in year number 2. Now see what has happened by doing this. In year number 1, no income. So what in the books of accounts, they directly capture where? In the balance sheet. They will not target the P&L, because as per AS9 they have an option. So therefore they are not targeting the P&L in the books of accounts in year 1. They are targeting directly the balance sheet. If this is what is the case, now the next point which you should now be very careful. If this is what is the case, then students in the second year, when they offer, okay, before I come to this ultimate question, I'll ask you this: do we have any specific provision under the PGBP which says that no percentage of completion method should be applied in recognizing the revenue? Do we have any specific provision under the PGBP? You may be aware of your IPCC. Have you read anything like we have to follow percentage of completion method for recognizing the income? You have not read anything of that sort. Why? Because there is no specific provision. Now, because there is no specific provision, I told you that 70% is governed by the commercial accounting principle, and in the commercial accounting principle, that is accounting standard 9, they have this option either to follow the completed contract method or completion contract method, and they have followed the completed contract method. And in year number 2, they will recognize the entire amount as the income. Now you tell me, once they recognize the entire amount as the income in year number 2, do they have the money? Think logically, like a common sense. Will they have the money with them, or they would have already spent? 2 years is a big time. Will they have the money in their pocket, or they would have already spent that money? They would have already spent their money. And I have not found so far in my life, I don't know whether any of your clients, your office where you go, have you found any of the client doing this? That when they are getting the sale proceed, or when they are getting their income, do your client earmarks, or he puts an FD of 30% of whatever he receives so as to pay the tax liability? Any of your client does that way, that whenever they are receiving the amount from their customer, they earmark 30% and keep it as an FD, and for the purpose of payment of their income tax liability? Have you came across with such kind of a client? And the answer is no. And therefore, if 100 is what I have received from a customer, entire 100 would get spent. And students, these money even does not stay in my hand in the assessment year. And this, you are talking First year, no income. Why? Because it is a completed contract method. Second year, you will recognize the amount, and the AY of the second year, you will then calculate the tax liability. At that time, you realize such a huge amount of income now has been generated in your total income, resulting into a huge tax liability. And does the client has the money in his pocket? Does the assessee has the money in his pocket? And the answer is no. So do you know what happens? What happens? You all go to your client's place during the month of July, August, September. When you go to the client place, what the client says? What your client says? The client gives you target. Look, this year I have to pay only rupees 5,000 as income tax. I don't have money. I don't want to pay anything more. So he gives you the target. 5,000 is the income tax that I will pay. Otherwise, there would not be any money even to pay to your boss. And if your boss doesn't get paid, then the things will come on your stipend also, isn't it? So all that factor has to be considered. So he has given you the target, 5,000 rupees. So what do? You take the reverse approach. Start with income tax liability, 5,000, then do a reverse calculation. Then how much should be the total income, isn't it? And that total income, then you'll put that as a number. And then what are the various debits can be pushed in the P&L debit? We'll go with that debits and all. Or many of the items are bogus. This is the reality. And why this reality has come? What is the reason of this reality? What is the reason for this? The reason for this reality is that we are following the commercial accounting principle, and because there is no specific provision under the Act, the commercial accounting principle that we have followed has given us the option of choosing between CCS, completed contract, CCM, that is completed contract method, or percentage completion method, and we have followed the completed contract method. And as per the CCM, we will recognize the revenue only in the second year. And that is the reason why the income, primarily the targets are being set, the income is computed accordingly, and this leads to not only the revenue loss to the government, plus also what? A huge litigations. The matter gets stuck in litigations. And the culprit, who is the culprit? Culprit is commercial accounting principle. That is your accounting standard in this case. Because that is influencing what? Influencing your profit and gains, which is chargeable under the Act PGBP. In a massive way, it is influencing your profit and gains, because 70% of your profit and gains is dependent on your commercial accounting principle. This, therefore, students, there is a huge noise value for two heads. Which are those two heads? IFOS and which other head? PGBP. Because they are heavily influenced by commercial accounting principle, accordingly what? This problem is alarming to the government, and hence the government has introduced what? Its own ICDS. And what is that? Income Competition Disclosure Standard. They have introduced their own ICDS, their standard of computation of income. Now you tell me, students, if there would be any, there are how many, by the way, are you aware how many ICDS has been given? How many ICDS? In all, there are total 10 ICDS. Now I'll ask you a question. If there is a conflict between an accounting standard and the ICDS, what will prevail? If there on the particular point, if there is a conflict between accounting standard and ICDS, what will prevail? It is the ICDS. Students, this is the gateway for your first ICDS. Quickly, students, 2 minutes time before we end up the day's lecture. I want you to quickly run through only point number 1 and point number 2. Just quickly run through this. 1 and 2, students.
स्क्रीन ये आ रहा है, ये स्क्रीन है।
मैंने वॉइस को बंद किया, लेक्चर चल रहा है, ये स्क्रीन है। क्लोज करना है, लेक्चर चल रहा है। Okay, students. So, in this regard, in this particular context, sale of goods, if you see the point in respect of sale of goods, there is absolutely whatever AS9 says, accounting standard 9 says, same thing has been written over here. What they are saying for sale of goods, they're talking about if the goods are being transferred for a price with all the significant risk and reward of ownership, and the seller retains no effective control, same thing, isn't it? So here the goods are transferred for a price with all the significant risk which has been transferred. And what is the important point here? It shall be if there is a reasonable certainty of its ultimate collection. So if there is any doubt about its ultimate collection, then the recognition would be postponed. This cannot be recognized as the income of that particular year. You will then postpone the recognition of the income. That is what the second particular point says, isn't it? For the service students, this is the point. And what they say, completion method is what you have to take into account only if completion method is allowed, but only if what? Duration of the contract of service is less than 90 days. Duration of the contract of service is less than 90 days. So in that case, only for those particular cases. Now, let me take this particular example. If I am taking a batch of say direct tax, 65 days face to face, in the month of March, 15th of March, I received the entire amount. I have received the entire amount on 15th of March, 15th of March, I have received the entire amount. Okay, the batch duration is for 65 days. So it implies that it will go in the next year, April. Do I have the option? Do I have the option to recognize the income only in the next year? And the answer is yes. I can follow CCS, that is CCM, that is completed contract method, because the duration of the service is for less than 90 days. So I can postpone my recognition of income in the next year, postpone the recognition of my income in the next year. But in all the other cases, it is the percentage of completion that only would be applicable. Students, before you take that final notes, this is the point that we will say. One more point I wanted to say. Point number 1, students, and point number 2 is for business and profession. These are all business income. 1 and 2 is for business income. See point number 3. Use of resources by others yielding interest, royalties or dividends. So what is that? You have interest income, thereafter royalties, thereafter dividend. So what about rent? Can you see anywhere rent? Rent from house property or from capital gains? Anything that you are you finding anything rent or capital gains in this? This is ICDS 4. They're talking about dividend, royalty, discount, interest, and something like this also. Are you finding anything relating to rental of house property income or capital gains? And the answer is no, and you will never find. Why? Because these two heads, house property and capital gains, 100% their computation is based on the statutory provision in that particular head. The statutory provision in that particular head, whereas in the case of PGBP and IFOS, 70% of their profit which is chargeable is influenced by the commercial accounting principle, and only 30% is what you give the statutory adjustments. So here actually we are giving only adjustments, add less, that's what we do in the head PGBP and IFOS, and this add and less is on the profit which is as per the commercial accounting principle. And hence ICDS is targeting not all the heads. ICDS is targeting only two heads which are influenced by the commercial accounting principle, Did you all got this one now? And this is how, students, it has to be considered. So finally, to conclude, and very important conclusion which I am giving it today, right now to all of you. To conclude, the profit and gains which is chargeable under section 28(1) is what? Which is chargeable, or I'll say chargeable under the head PGBP. Under the head PGBP is what? Is the profit as per commercial accounting principle, and then add or less what? Now two things. Which are those two things? The two things are statutory adjustments. And statutory adjustment, what is the section? What is the section? Section 28 243D. And the second one. So this is the first add and less that has to be considered. And second one is what? Second one is the ICDS 1 to 10. So this is what will give you the amount which is finally taxable, under the head PGBP. Under the head PGBP. Students, do ensure to revise this very carefully, whatever we have discussed today. Please, a request to all of you, revise this very carefully. This is very important. I am telling you, nowhere across, you can ask to your senior also or anyone. They are not doing the way we are doing direct tax law. You can check it out, compare, and this is therefore you should understand that this is the reason why direct tax, they consider it very tough. They have not understood the core concept from where you have to start, the flow, the approach, how you should enter at a particular point of time to a particular provision. All that is so integral to get a very firm grip on this subject. Not only to really pass out in this paper that you are going to do with flying colors, but also to make a very solid career in direct tax law. So students, your job now is to ensure to go home, because today's class was an important one in terms of the content part being very high, and hence the revision is very critical. Please go home. That's a request to all of you, that go home, revise it, fine, and I'll see you then in the next class. Thank you very much. Have a nice day.